Hi, my name is Rod Khleif, and I'm the host of the Lifetime Cashflow through Real Estate Investing podcast. And every week I interview multifamily rock stars, and we talk about how they've built incredible wealth for themselves and their families through multifamily properties. So hit the like and subscribe buttons to get notified every Monday when a new episode comes out. Let's get to it. Welcome to another edition of How to Build Lifetime Cash Flow Through Real Estate Investing. I'm Rod Khleif, and I am thrilled that you're here. And I know you're going to enjoy and get tremendous value from the two gentlemen that we're interviewing today. It's Nate Barger and Mike Ealy with Nassau Investments. It's nassauinvest.com. And these guys have been in the business a long time. They've owned over 3,000 doors, currently own somewhere between 1,100 with doors under contract right now. And we're going to dig in. We're going to talk about what's happened, what happened in 2008 and how they survived. But welcome to the show, guys.
Hey, thank you, Rod. Thank you for your time. And thank you, all you viewers, for viewing in and supporting Rod.
Thank you. So why don't you guys start at the beginning, or start at the beginning of your real estate career, and just talk about how it started, transformed, and to where you are today.
Yeah. So for me, I started 90, 99, early 2000. Started off with a two-family. Nowadays they call it house hacking. So I simply called it getting a roommate, and I did it on a land contract. They wanted 700 down and 3,000 down for a down payment. I couldn't afford that. I was working 3 jobs and raised enough money, worked out a deal where I paid 1,000, paid my down payment over 2 or 3 months, got the upstairs fixed up, couldn't even paint. Matter of fact, the contractors would send me downstairs because I was that bad. And I rented the upstairs for 500, got me a roommate for 700. And that was the beginning of me living rent free.
Love it. Love it. Yeah. And a lot of people are doing that. It's a fantastic way to get started. And so talk about the transition. Well, actually, please tell your story as well.
Well, Rod,
he's not important.
Yeah, mine's not important.
Oh, okay. All right.
Mine is kind of rated R.
Oh, it is. Okay.
Yeah. So,
okay.
I started off, at a young age, I started off selling drugs. 14,
very profitable, high margin business.
Correct. Well,
but there is a risk component.
Yeah, my parents were young alcoholics, so I didn't have a lot of guidance. So I naturally navigated to the streets and grew up in a poor neighborhood. And by the time I was 22, I've been in and out of prison twice for trafficking drugs, which now. The marijuana is almost legal. So I tell people I was a visionary. And by the time I was 29, I had millions of dollars, but I was depressed. I was so worried that, I was bringing in weed from Arizona. It was very profitable. I make $242,000 every trip, and I could do a trip every week. Profit. So it was very profitable, but it came with a big cost, which was your freedom. And so I didn't know what to do. I never had a job in my life. I was 29 years old, and I cried out to God. I ruined my life. I didn't know what to do. And when I tell you, I had everything that you could humanly think you could want. I had a nightclub, I had cars, I had women, and I was miserable. And so I cried out to God, and I said, show me a way. I've ruined my life. And he showed me real estate. And I had a little bit of experience at the time doing construction, because I was trying to find something to do, not so much laundering money, but I was just trying to find purpose in life. So
why were you miserable? Why were you miserable?
Because,
and forgive me, I don't know which one of you is Mike and which one's Nate. Sorry, guys.
Yeah, that's Nate.
Nate is
the white guy. The
nice looking.
That's counterintuitive, FYI. But okay. So Nate, Nate, why were you miserable? I'm just curious, because we talk about the psychology of success a lot on this show as well. So you had all this money, you had a nightclub, you had women. Every guy's dream at the age that you were at. Why were you miserable, brother?
Because the inner desire was to have a family, right? And you want to have a family, and you want to have kids, and you want to be able to sustain that. And the FBI is watching you. And if you slip up, you're doing 20 years. So every day, the amount of stress that you're dealing with is, and when I tell people, they say, well, how can you deal with all the stress managing? I said, man, that's nothing. Try having the FBI watching you. You know you're doing 20 years if you slip up. So the stress level is different when you come over here. Yes, we're dealing with stress. You deal with, the more stress you can deal with, the more money you can make, you know? So that level of stress is I haven't seen it in multifamily. And
no, you're not. Well, let's pray we never do. But well, you know, the thing that's interesting about your story is, I mean, for you to set up the you know, obviously it was an illicit business, but for you to set that business up to the scale that you did certainly transitioned into your success today, because you're obviously an entrepreneur. You just went down the wrong path for a little while. And,
exactly.
And all of those skill sets carry over.
You're absolutely
you
right.
Probably had employees, you had business systems, you had all of these things that carry over. And
you had distribution, you had,
right.
You know, it just, you know, you had accountability, you had to know how to manage money. And then, so my first year when I cried out to God, he showed me real estate, and my mind was so warped. I remember I was probably the only drug dealer you knew with a budget. I was really good with numbers. My budget was $57,000 a month is what it cost me to live. I was reckless. And so I did this real estate, and I 30 minutes, I put a plan together, and I Googled, and I found out, you know, how much the GDP, how much real estate. And I was like, this could work. And then I figured, okay, I can make $10,000 a month. And I was like, who can live off that? I mean, that's how warped the devil had my mind. And so I came out of that. In my first year, I did 10 single family houses, buy, fix, and rent. And, you know, I was pulling cash outs because I was creating value just like we do now.
Right.
And I had 10 buildings, and I had pulled out about $250,000, $300,000 more than what I had in them, because you could do stated no doc loans back then.
When was this?
What'd you say, Rod?
When was this?
Oh, this was 05.
Okay.
You know, right.
I mean, you could fog a mirror. You could borrow 125% of what you own. You know, one of the craziest stories I tell people is an underwriter came back and they said, well, you know, how do we know that it's your company? He said, I want a business card saying that you're the owner on it. I was like, are you kidding me, man? You can't make this stuff up.
Yeah, so I paid the guy $29 and he got me a business card.
So what happened next?
So then what happened was, my first year I did about 10 houses. I made a $250,000 to $300,000, but now I had all this debt I had to service. So I took it to a property management company. They couldn't rent them. I said, hey man, give them back to me. It was a buddy of mine, and I said, give them back to me. After about 2 weeks, he didn't have any rented. And I was like, so I ran an ad and I rented all of them in one weekend. I was just, you know, boots on the ground, just guerrilla marketing, just get out here and get it done.
And guys, these guys are in Cincinnati, Hamilton County, Cincinnati is their home base. I forgot to mention that. Okay, please continue.
Yep. So, you know, that was the start of what would become a lucrative from 2005 to 2009, 2010. I acquired about 250 apartments and some industrial, and I was bankrupt. I over-leveraged myself. I bought assets that that just went to zero, industrial, commercial. And I called my buddy, Mike. I said, Mike, I need some help, brother. And Mike, being the calm person he is, he said, you know, I'm panicking. And Mike's like, hey, it sounds like a great opportunity. And I was like, what do you mean? And so
this was, now we're in 08? We're in 08 or
we're in a 10. We're in about the end of 9 and 10.
Got it.
Because I had about $500,000 in capital, and I burned through my capital trying to sustain everything. Right. And it just, you couldn't. You were losing tenants left and right, and you were renovating units, and there was, on the houses. Now, I will say my multifamily did well. But the houses is where I had the most problem. Multifamily, because you go to 0% occupancy, you got a $3,000 or $4,000 turn, and there's nobody to rent to. And so let me interject something. You've never heard my story, because what you just said is exactly what happened to me. I had 800 houses and some apartment complexes in 08, and it was the houses that pulled me down. Yep.
So it's refreshing to hear someone else have the same situation, because I've actually never heard that before on the show.
Well, I had industrial too, and I had these big mortgages, and I didn't realize at the time I was personally guaranteeing everything, and I had signed what's called a cognovit note. So one day I get a call from my tenants and saying, "Hey, the bank's down here and says that they're the new landlord," and I hadn't been to court or anything.
Wow.
So a cognovit note, there's only a few states that allow it, and so what we immediately did, Mike helped me put a plan together. We had investors who believed in us still, never missed a payment to them. And so they ended up, one of them in particular, he ended up saying, "What do you guys need?" We ended up going and buying everything back from the bank, buying the mortgage notes, and even settling some of the debts that I had for pennies on the dollar.
Yeah, I was going to say, I'm sure at a hell of a discount. Good. That's awesome.
Yeah, they were great.
Yeah, I remember Mike, one of them, the property I still have today is probably worth $450,000. And we owed, I think it was $150,000 on it. It was a 4-family with 2 4-bedrooms, 2 3-bedrooms. And Mike's on the phone and he says, hold on, I got it here. And he shuffles some paperwork around and he tells the bank lady, "I can give you $52,136.28. And she took it for the note. And I said, "Mike, where'd you get that number?" He was like, "Oh, I read it in a book somewhere, you know."
Yeah. That specificity lets them know that's it, man. That's it. That's as far as it goes. Love it, Mike. I bet you're a hell of a negotiator. So you made lemonade out of lemons, man, and that's fantastic.
We did. And it was the thing where you got a lot of pressure right now, and you owe investors, right? So you could run, or you could take care of your liabilities. Mm-hmm. And so ours was not only once I started taking care of the liabilities, man, that's when investors said, "Hey, man, I love the way you're handling this. You're being transparent. What can I do to help you?" And one of our investors gave us another $2 million. And back then, that was like $15 million now.
Oh, yeah. You could especially, because you could buy more of those notes. They were distressed assets. I mean, I got to tell you guys, you guys are an anomaly in this regard, in that most of the people that I interview on my show that have thousands of doors or have had thousands of doors started in 9 and 10 and 11. You guys went through it. So because of the incredible opportunity back then. Now, guys, if you don't think that's right around the corner again, those of you listening, I'm here to tell you it absolutely freaking is. And so I want to salute you guys for how you handled it back then, but also let my listeners know that, if you're taking care of the people that matter, your investors, your team, absolutely. And you're maintaining those relationships and you're helping them manage the fear, because it's counterintuitive. I just did an interview with a guy about, this whole coronavirus dynamic. And, we have a primal fight or flight mechanism that's being triggered right now. And the same thing happens, not just, and that's of course on the health side, but also on the economic side. And so, people are hiding their head in the sand or trying to run. And it's counterintuitive. Some of the wealthiest people on the planet are the ones that are contrarians that take advantage of what's coming. And that's, what I'm sure you're telling your investors and we're telling our investors, and that is to not to be fearful right now, is to start rubbing our hands together. And I love this term. I heard it from Jay Abraham, a brilliant marketer, which is, it's a time for ethical opportunism. Isn't that an awesome term? I love that, man.
Well, Rod, one of my greatest, the greatest quotes, I think, is Warren Buffett. He said, "When others are fearful, be greedy. And when others are greedy, be fearful."
I love it, man.
And, so everybody's fearful right now. It'll bring opportunity, but you have to approach cautiously. I think there'll be great opportunity for you and your investors. And we're putting together money right now. We're raising capital even more than we were before, because we know the government is going to need people like us to lead back and help get this economy back in order. And so there will be plenty of opportunity for people that are willing to go out here and take educated risk.
Overall, we had the opportunity, whether it was a fun ride or not, we lost. And so we know how it is to be at the bottom. We know how it is to lose money every day. And so, but we were able, because I went through that before the market crashed and then helped multiple people during the crash, We were successful. And so we're prepared today. And right now, we're seeing in the industry right now, just the hospitality. I mean, everybody's being affected, but the hospitality industry alone is being affected greatly. Like a lot of the great layoffs right now are happening in the hotel industry right now. But
you bet. I just had a cancel a 600 person event at a hotel, the Wyndham in Orlando. And boy, I want to give them a shout out. Talk about stepping up, refunded all our money. You know, we're rescheduling for next year and so, you know, did the right thing. But God, what a hit they're having. So,
And it's just an example because, you know, let's say most of your hotel, like a regular limited service courtyard comfort suite, you know, you got about 30 something employees. Most of them are, you know, janitorial, housekeeping. They're laying all those people off. Well, that's just a sign of what's to come because those people are basically your people taking your C properties. They're going to take that hit first. So people are not people that overpaid for the properties that they, you know, in these C areas paying at the high 6.5, 5.5 cap rate. There's about to be a bleed in here.
Yeah, but we still see opportunity because the banks cannot. They're going to need people like you that can manage.
Oh, absolutely, absolutely.
They
Step in and
take back everything, and people need housing. So we're looking for not the panic. We are looking for the opportunity. Now, with that said, we're approaching cautiously, and we're underwriting. You know, what's our break even? You know, what can we scale back? What is necessary? You know, but it's just managing an asset, and that's why we're asset managers at the end of the day. And so are you guys.
And you know what? Before we go even any further, but you know, before we get into our ethical opportunities, I also want to say, look. If you have the opportunity, you have the financial resources. Also, look out.
I'm laughing because Nate just put his fingers above Mike's head. It was funny as hell. You can't see it if you're listening on iTunes, but
no, hey, you know, look out for the people around you. Look out for some people in the community that's less fortunate. You know, donate to a church so that they can look out for people that, you know, hey, some of you, you know, some people out here living check to check. Some month to month, but you got businesses living, you know, day by day, and they're going to need a little help. They're going to need a little motivation. So, you know, just reach out to them, you know, give them some love, send them some motivation. And if you can, you know, give them a couple of dollars to keep moving or feed them. All right. But
yeah, small acts of kindness.
And you know what, quite frankly, it'll come back to you multifold. You know?
And I think
it always does.
Rod, you know, it could possibly bring this country together. This country's always come together when we go through troublesome times, and you know, we're no more divided today. We're more divided today than I think ever before. You know, with the wealthier getting wealthier, and with the poor people struggling more.
Well, forget the whole political. You know, I mean, you know that the whole political thing, and you know, and you know, I just interviewed a guy about, you know, this whole coronavirus thing, a doctor, and you know, this social distancing is going to be around a while. And so, you know, people are going to need to connect virtually like we're doing on Zoom here right now. And companies are going to need to modify their business models to allow people to work at home but still have that personal connection, albeit digitally, because people need it. And so, you know, it's going to be interesting, you know, how quickly people embrace that and in light of current events. So let me ask you this: what are you guys doing, or have you done, to stress test with some specificity, if you don't mind, to stress test your deals prior to closing on them up to this point and moving forward as well? I'd love to get some detail.
So up to this point, I mean, we always ran 2008 as a stress test. We modeled 2008. And I mean, that was the worst thing we could imagine. So what sort of vacancy, you know, do you plug in? So multifamily on the last cycle in Cincinnati, we went to 89%. But realistically, we stayed at 95 because that 89 was skewed by apartment complexes that went to zero. So there were apartment complexes that were shutting down. The water was getting cut off. we'd go over there, we'd put flyers out, and we would bring them tenants right over, and they were getting help and they were getting aid, and we'd move them right in. Mike worked with a lot of, with the city, with the Free Store Food Bank, with a lot of programs at that time. And actually one of our first big multifamily deal was a 48 unit, wasn't big, but we paid, what did we pay? $4,000 a door for it. I mean, it was unbelievable. Nice.
Wow.
And
212.
It was 220,000, and we got the Bayview was the servicer. We got them to sign and say that any tax appeal that we won, we would get back. So we argued the taxes. It was valued at $1 million. We got it reassessed at 220, and we got $26,000 check back. So we really paid $194,000 for the building. We had $380,000 in it, and we sold it for $1,650,000. Nice. But Mike quickly, I said, look, we had 8 tenants in there, and we closed February 27th or the 28th, and said, okay, you rent them up, you lease them up, and I will turn these things over as quick as you can get them done on the construction side, because I do construction management. And Mike brought one person through, and they rented every unit. And I was like, really, dude? So by April 15th, we were working 2 shifts, 2 12-hour, we were working 2 10-hour shifts. We were working from 6 o'clock in the morning to 10 at night. We were just working like around the clock, and we got all them units ready by April 15th. We were 100% occupancy.
Okay, now excuse me.
That's a story.
That's a great story. That was awesome, but you never answered this question. How you stress test it, man?
Thank you.
Now look, that's my buddy. He's always aggressive. But one of the things we did, we're very conservative. At least I am. Nate, on the other hand, he likes to push the numbers, and that's how we balance each other out. So with me, we look at the square footage, and like in Cincinnati, everything's written for $1, at least $1 to $1.10 a square foot. So in summary, 600, 700 square foot unit should typically rent for $600 minimum. All right. But I would be conservative. Instead of knowing that we could get 750, 850, I would write it at 600, 650. And then from there, we do our escalations, and I'll throw in all our fees. I'll include interest carrying payments, construction fees, construction management, any architect marketing fees, and then I'll run it at a 10% vacancy.
For how long?
I'll do the first year, and then after that it'll tailor off. Now, if there's renovations, I'll do a higher vacancy to throw a number off, maybe a 15, 20%. Vacancy.
Yeah, that's what we do. Good. Yeah.
And then we begin to escalate with the numbers. And after all said and done, if that works, then we know we got a deal. Here's a perfect example of bringing it into reality. I got 2. We're going to talk about Hassel and Spruce, or we want to say the University Town Hall?
Why don't you answer this question first?
Well, you
guys must have a lot of fun.
I'll tell you, here's what we're looking at right now going forward.
Okay.
So right now we're stress testing, saying, okay, what if we only have 20, 30, 40% collections? What's that look like? How much cash are we burning? Can we sustain 18 months? That's what we're looking at on this deal that we're supposed to close today. And we're saying, okay, we have an extension. We can put another $100,000 hard to get a 3-week extension, right? So, we're looking at our options right now.
Okay. So you're reevaluating your deals as we are as well.
Yeah.
But we stress test really heavily. I mean, our minimum day one is 25. We have to break even at 25%, vacant. And then we're also generating big operating reserves, rainy day funds, so it sounds like you guys are doing the same thing. It's just so critical right now.
Our typical value add deal, our break even is usually 60% occupancy.
Wow.
So
day one? Or after repositioning?
With the newer rents coming in.
Okay. Yeah. Same here. I'm talking about, I'm talking about the day we close.
Yeah.
But yeah.
Well, the one we're closing on today, we're buying at 20 something a door. And I mean, the guy's getting $395 and $495 rent. So
hard to miss that. I mean, that's gonna, that's going to be. Now, are you concerned about that asset class? Obviously, that's CC minus at best.
I mean, like I said, the hotel industry is a perfect example. Like right now, those people that would live in this type of this industry, this type of housing, they're not going to be working.
Right.
And how are they going to pay their rent? I mean, now they'll make it out of it. But, you got to be able to maintain during the layoff season. I mean, it's really that simple. And, is it worth it? I don't think we'll lose money, right? I know we'll recapture it, but, we're going to have 3 months, hopefully less. But reality is it's at least 3 months here before we even make any movement.
It'll come in waves, like we'll go through summer, it'll die down, and then it'll come back again in the winter. And it's just going to, he called it a new normal, where really things are changing. I mean, it's just going to be, and, like my business, my event business is pretty much out the window, and it may be out the window for a very long time, if not, like 3 to 5 years, literally.
Really?
So,
well,
some
brother,
serious
we're
sobering
praying
stuff.
for you guys, and we're praying for you. And, man, if there's anything we can do to help out.
No, I appreciate that. We're just going to have to change the business model. We're going to have to deliver the material virtually like this. The piece that I've got to work out is the networking, because a lot of people come to my events to raise equity and network and all that stuff. So I've got to create a virtual networking component to the business, which is, that's just, it is what it is. We'll make it happen. We got to duck and weave and get through this. And that's what we do. You have to, if you dig your head in the sand and think it's not, that everything's rosy or it's going to get better instantly, it's naive and you're going to get your ass handed to you. So, But so you guys talk about, you guys are an incredible team together. It looks like you have a lot of fun. You have a tremendous respect for each other. Talk about the dynamic of your relationship and I want my listeners to hear, because a lot of some of the most successful people I ever have on the show are teams like yours. Like one's more outgoing, the other's more analytical, one's more, reserved, the other one's, and that's my relationship as well with Robert. He's a CPA, done $1 billion worth of deals. Me, I'm, the more outgoing one. Talk about how you guys make it work. If you would.
And that's key. The partnership is key, because a lot of people, they go out here, and I learned on one of my first big developments, a lot of people go after people just for the money. Hey, this group, they got $1 billion, they got $50 million. It doesn't matter. We actually turn down money. We've turned down investors that offer $2 million because we just felt it wasn't the right fit.
Same here. Yeah,
and it's very important, because look, you're working every day. You're going to have challenging times like today. It's a marriage. So you're in a challenging position and you can't trust that other person. You're constantly fighting and bickering. And now you're going through a time like this,
It's just going to exasperate it. It's going to make it worse. Yeah.
Yeah. So, no matter what we go through, man, we have some of the greatest times. We laugh about it. We get serious, but we move on. And so I'll let you go ahead, man.
No. Let me just say something to that, because this is something I talk about a lot. Some of the things you just said, Mike, and I've even got a book here. Hang on. Just got to find it. But okay, I have a book called Questions to Ask When Forming a Partnership, because you got to ask all the hard freaking questions up front. You're going to have upsets. You're going to have, I'm sure you guys have had some knockdown dragouts, and that's what happens. But
we really haven't.
No, that's
because,
fantastic, man.
Because I tell Mike, and just today, he said, "Hey, if it's that important to you, Nate, then I'm with you," and that's it. I mean, it's great.
That's
I wish he was a woman. I'd marry this guy.
That's beautiful. No, and what you have is rare. I will tell you, because I shouldn't say that. What you can find what you have, but it's hard. You can't jump into it. Yeah, it is hard, and you've got to make sure you're connected. You've got to make sure you have complementary skill sets, not the same skill sets. And and you've got to ask those hard questions up front, because a partnership like a marriage is easy to get into and hard as hell to get out of. I mean, I've got, I run the multifamily boardroom mastermind. We've got probably close to $7 billion in assets represented by the people in that group, and a couple of them, two of the larger players just went through partnership breakups because of work ethic issues, of ego, of these things, and so yeah. So if you guys want this questions to ask when forming a partnership, hang on. I've got you can text partnership questions. Oh no, sorry, text partnership to 41411. I'll get you the list of questions. Partnership to 41411, guys, if you're listening. But please continue with the conversation.
Yeah, no, and I'm gonna let Nate, because he's more detailed. But look, holistically, through my partnerships, not only did I learn great deals in real estate, I learned how to make my first million by just watching other people and working with other people. But I learned the other things. I learned the importance of going to the daddy-daughter dance. I never saw that growing up. My parents loved me, but nobody ever went to the daddy-daughter dance. And that's something me and the daughter love. Spending more quality time with the family, which we stress among each other, and, being a leader in the family. And it's just these small things. It's just the simple things in life. I take those values even more than the returns we made in the deals.
I mean, you're speaking my language. I mean, this is anybody listening to my show has heard me talk about this numerous times. In fact, my sales video for my boot camps say, I'm running out on stage, and the words and my words are, I'm an expert in making money in real estate. I'm an expert in teaching other people to make money in real estate. I'm an expert in setting up the systems to make money in real estate. But then I go, but anybody can do that. And then the focus is family. It's keeping balance. It's remembering what's most important. Because frankly, that's more important than the freaking real estate.
There you go.
I tell the story. I had two kids, and I'd come home. Yeah. I'd come home and I'd be focused on business, and I'd play with them, but I'd be distracted. It's my greatest regret in life to this day. Yeah. And so I stress that with my coaching students and at my live events, that yes, the real estate and the money is important, but let's look at what's most important. Anyway, thank you for
hey Rod, and to add to that, I think that everybody listening, instead of panicking right now, our kids in Ohio are out of school. They're not going to go back to school the rest of this year, is probably the perception. April 6th, at least we got them till. And so Mike, we were talking and said, what do you do right now? Well, you do what you can do, but you social distance, but you enjoy your kids and your family right now.
Right.
And so how do you find a way to do that?
And recognize that they're watching you. I got this little saying, this little card from someone that I've mentored with, Brendan Burchard, and the saying is, you can show your family that in times of chaos you retreat into distraction and entertainment, or you choose to skill up, man up, learn, deepen relationships to progress rather than pause, hide, or hunker down. You still have goals and dreams, and they are watching.
Amen.
Love that, man. Love that. So, so again, back to your partnership, that's give and take. It's complementing skill sets. It's asking the hard questions up front. What if this happens? What if that happens? Who's going to handle this? Making sure you're aligned with work ethic, that you're both going to work your asses off. Otherwise, you're going to have dissonance. Somebody's going to be unhappy because there are other person's working too hard. It's clearly defining who does what. I'm sure you guys each have roles in your organization. You're in charge of the construction, Nate and Mike, you do the analysis and the acquisitions, or am I? I'm just guessing.
No, you got it.
Yeah,
you got it. Yeah.
Would you say, Mike, that you're more analytical in the relationship and Mike's more outgoing?
It's funny now; those roles kind of switch. Even though I'm more the reserve, I'm not analytical. I look at the big picture, and I round and estimate. This guy wants to down to the penny.
Wow.
Like
Interesting. Interesting. Okay.
So I'm very analytical, and I just know numbers really well. You know, because when you're dealing with grams and pounds and, you know, I used to try to get them Ziploc bags that were 12 grams instead of 10.
Yeah,
So,
you know, I should have guessed that. I forgot your history for a minute there.
Well, and then, he couldn't write nothing down, so he had to.
You got to remember it. So,
man, I love your story, man. I got to tell you.
So, man, craziest thing is that we don't have defined roles, really. Like, we just know what we got to wake up and handle. And I got to tell Mike sometimes, he's sending emails at 3 o'clock and I'm talking to him at 7. And I said, Mike, look, man, you need to take a break. Okay. You need to take a break. You're going too hard. Go down to Miami and take you a week. And Mike, don't I tell you that pretty much a lot, because, you know, we're going to get stuff done. And that's not like, we are both like work very hard and make sure that we don't miss deadlines. Yeah. And that, like you said, that's rare.
Well, it is. And that's a synergy. And I mean, that's a beautiful thing to hear. Well, listen, guys, I really appreciate you being on the show. It's been a fun, interesting conversation. And I think I'd like to actually have you back on, you know, in a certain period of time here, you know, so we can really dig into the real estate more. This has been more, you know, kind of reacting and to the current climate. But listen, guys, stay safe. It sounds like you guys got things well in hand, and I really appreciate you adding value to my audience today.
Hey, we appreciate you too, Rod, and we'd be honored to come back on, brother. And man, if you ever need anything, let us know. I mean, we're all going through this together. Yeah. We'll see April and May. We'll start to see where the rents trend at and the collections. A lot of the states have already halted you know, evictions. So, you know, we got to see where that's at. And
we got to see the impact. We got to see the impact on us. Yeah, for sure. So, yeah. Well, listen, I appreciate you guys, and I'm certain that we'll get to shake hands the next time I'm up in Cincy. I know Robert, you've already met Robert, but I'll make sure that we connect when I'm up there next as well. So, anyway, be safe, and we'll talk soon.
You too, Rod. Great seeing you, brother.
Fist
bump.
All right,
thank you. Boom. Yeah. Or elbow bump now, right? It's got to be an elbow bump. All right. Well, listen, guys, take care. It's great to meet you. I had to cut just a hair short because I've got some things I have to deal with. All right. Take care, guys.
No worries, brother.
See ya.
Thanks.